Welcome to Tax Insights, presented by Hawkins Ash CPAs.
And good morning, listeners. Welcome back to Tax Insight here on WOMT. We're talking with Jeff from Hawkins Ash. Good morning, Jeff.
Good morning, Terry.
How are you, sir?
I'm doing well.
Excellent. Jeff, today we're talking about the benefits of rental real estate.
Right, because, there's a lot of different types of rental real estate. There's people that rent out their personal residences or their vacation properties. People purchase property for residential rentals and others who do for, commercial rentals. All these have their own kind of differences. But today, I just want to focus on residential rentals.
So what do you like about the residential rental properties?
So these can be a really good way to do a number of things. Shelter taxes, it's a good way to offset maybe some of your other income on your return. And the potential to defer the gain when the property is sold is really cool.
So let's start off with sheltering of taxes. What does this mean?
Yeah, so real estate tends to be one of those investments that go up in value, especially if the owner keeps up the property or makes improvements. And like other investments, the IRS actually doesn't tax you as the owner of the property on unrealized gains. So the property has to be sold in order for anybody to pay taxes on that appreciation. And if somebody holds that property for a really long time, they may never have to pay tax on that appreciation.
And the losses can be used to offset other income, correct?
In many cases, yes. Now, if you have losses and your other income is greater than $100,000, some of those losses, may be limited, and they're not lost. They're just deferred until either your income goes down or you sell that property.
So what kind of expenses can be used to create that loss?
So the way I like to look at it is, if you have an expense that you would not have normally incurred if not for that rental property, then it's probably deductible. There's the main ones like interest, taxes, repairs and maintenance, utilities, insurance. But there's other things like mileage that you spend, using your personal vehicles, advertising, legal and accounting, those kind of things.
Now, what about depreciation?
Oh, glad you brought that up. That's one of those things that when you buy an asset and that asset is expected to last a year or less, then you can just expense that as it's purchased. But if the asset is expected to kind of last longer than 1 year, you would want to deduct that over its useful life, whether it be 5 years, 7 years, 15, or 27 and a half. There's ways to depreciate them faster, but, depreciation is a method of kind of writing it off over their useful life as long as it's greater than a year.
Right. So you also mentioned ways to not pay taxes when the property is sold. How is that done?
Yeah, unlike, most other investments, when an owner wants to sell the property, they cannot defer the gain. But in the case of real estate, it's different. By trading or exchanging the piece of property for another piece of similar property, you can defer that gain. It's called like a deferred exchange or a like-kind exchange. It allows the owner to roll the gain that they would have had on this property sale into the next property and not pay tax until that property is sold. And what might even happen is, let's say that the owner passes away. If that property ultimately goes to their heirs, then you don't need to pay tax at all in most cases on that, that increase in value.
Right. Jeff, great information each and every week here. Time is running up. Anything else that we should know before we have to get going?
Yeah, so the Biden plan is looking at ways to limit how much of that gain can be deferred on these like-kind exchanges. I think the current proposal is to limit the gain to about $500,000 for individuals and $1 million for married couples. So in that case, I don't think it's going to impact too many of the people we're talking about today who own residential rental properties.
Yeah, Jeff, great information. Like we said, each and every week here on Tax Insight. For those listeners that want to connect with the team, the experts at Hawkins Ash, how do they do that?
I would go right to our website, hawkinsashcpas.com.
Jeff, we'll talk to you next week here on WOMT.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs, part of your business, part of your life.